Welcome to the first within a series of digital trade panels. The importance of the continued support needed for supply chains and international trade further grows in momentum. Taking the recent series of events from the last decade, from the financial collapse in 2007 and 8, trade wars to Brexit and more recently pandemics, every crisis cycle we go through, whether driven by financial turbulence, economic uncertainty, or the emergence of the pandemic, strengthens the case for digitalization, making the relevance of technological solutions ever more acute. Moving towards digitalization and into an ecosystem of digitalization is an enabler that provides organizations and banks with the security of being able to manage its processes, valuable information, and run its business from basically anywhere and in any way it seems best, ensuring banks and their clients optimize their operational relationships and services. Today, we're taking you on a journey where we will explore where we are and where we're going, navigating opportunity through uncertainty, and lastly, tackling what banks need to think about doing today to be ready for tomorrow. So, to take us through this journey, we have a great panel of experts, all with significant amount of experience from working within all facets of banking to technology, corporate treasury, and consultancy. So, firstly, Casimir Weisblatt, Associate Director at Efficiency Management Consulting. Antonio Bogo, Sales Engineering at TradeIX Marco Polo Network. And our very own Michael Viscapan, Principal Global Solution Consultant at Finastra. So, to start off today's session, let me set the scene. I will ask each one of the speakers to give a quick introduction and give their views from their industry perspective on how they're seeing organizations are dealing with the elephant in the room, COVID-19. So to start, Casimir, it would be great.
Hi, Adam. Thank you for that. So Casimir Weisblatt, I'm one of the founding directors of a consulting company which specializes, among other things, around corporate banking with focus on trade finance and supply chain finance. So how do we see these interesting periods, as we would say? Lots of things happening, lots of activity. We've had to reorganize ourselves. We've seen ourselves reorganizing. We've seen our banks reorganizing, our clients, and lots of challenges that need to be catered for.
Great, thank you very much, Casimir. Antonia, please.
Hello, everyone. Good morning from Berlin. Thanks for having me here, Adam and the Finastra team. So my name is Artiona Bogo. I lead the sales engineering practice for EMEA at TradeIX. So for those of you that do not know TradeIX, we are the technology provider and the network operator behind the Marco Polo Network. So at TradeIX, we were one of the fortunate ones, if I can put it like this, to continue operations without any disruptions. We're all working from home since a couple of weeks. We have teams working from home from Dublin, London, Singapore, the US, Germany. Maybe Adam, if I can take 2 more sentences to introduce the Marco Polo Network to all participants who might not know about what we do. So the Marco Polo Network is the largest and quickest growing distributed trade and supply chain finance network in the world. It's a joint undertaking between technology firms such as TradeIX, R3, and some of the world's leading financial institutions, corporations, and technology providers. We have gathered thus far 35 global banks. And really, the vision behind Marco Polo is to provide an open platform for trade and supply chain finance, just like Android or iOS, provide a thriving backbone for all the apps that are developed on top of those operating systems. We at Marco Polo, through a blockchain-based network, want to enable key stakeholders in global trade and supply chains to interact with each other, exchange data in a highly automated and secure manner.
Great, thank you very much, Artiona. And lastly, Michael.
Thanks, everyone. I mean, I'm not saying that I have much more to say than what has already been said, just at Finastra, a little bit like my two previous friends, we've undertaken some drastic and very protective measures for all our people. Obviously, at Finastra, we have a culture of working remotely for quite some time. So I would say that the direct impact on all the workforces and the sales forces has been not that great, and touch wood, most of our people have not been directly impacted by this crisis. Nevertheless, and I'm sure that Casimir will further expand, as you know, we do have a lot of solutions, not only in the transaction banking, trade finance, or supply chain finance area, that require interventions, on the field interventions, and so on and so forth. So obviously, every customer counting, we had to adapt, we had to be flexible, and we have to get as close as possible, especially in the first 2 to 3 weeks of this crisis, whereby when there is a patch to roll out, when there was a bug, when there was something happening, we had to intervene as fast as possible. I think we are a little bit beyond this step now, and we are now in a position to restart really addressing and thinking a bit ahead.
No, definitely. Thank you very much, Michael. I think these kind of challenges that are being experienced across all organizations within the market. But from organizations to financial institutions, Michael, how are you seeing financial institutions reacting to this pandemic? And what, from your perspective, do you see being the short-term and more long-term effects on trade finance?
Thanks for asking. I'm just giving up. I'm just taking my crystal ball. No, joke aside. I can say that whether it's Finastra customer or actually any type of financial institution customer, I tend to split them in 3 different categories. I mean, the ones that were fully digitally enabled, and again, I'm not making a differentiation between supply chain finance or trade finance or anything. The ones that had projects ongoing, and that, or considering new digitalization, because that's what we are talking about, you know, like this qualitative jump into the digital world. And the third categories of financial institutions, the ones that were not able, that did not consider, for good or bad reasons, to go in a more digital world. So to start with the first and easy ones, the ones that are fully digital, I cannot really say that it was business as usual, because it wasn't. Nevertheless, the shock was much less important. So they had plans, they had recovery plans. They immediately enabled people working from home to protect their own banking staff, to protect also the businesses, because that's the most important part. When we're talking about trade finance, you're sending the BL, you're sending the shipping documents, for instance, you need to be capable of processing those. So they installed scanning solutions. They installed many different I would say solutions within their own bank for quite some time, and it was the occasion to see how much they could stretch their systems so far. And we do have quite a lot of our customer base. A lot of our customer base is using front to back solutions. We noticed a huge increase into what we used to call our front end, or e-banking, or customer channel. A huge adoption or decrease in the paper utilization. And again, external shocks, reality of the market, you can't go to the office, paper are pseudo-contaminated, and so on and so forth. I think there was some extra precaution measures that have been taken by these customers that were way easier to handle and to measure and to address, rather than in the second and the third category of banks, whereby, as you can imagine, and on this one I will let Casimir further expand, but when you have a project ongoing to digitalize a bank, again, whether it's supply chain finance or whether it's trade finance, or when a bank is not digital at all, what are you doing with the documents when they reach your cashier? If the cashier is open, or if the bank is open at all, or even if the documents in some countries, I think we were discussing with Casimir, even if we're talking about Morocco, for instance, or other countries where the documents are blocked at the border because they simply cannot get delivered to the bank. So how are you bringing on the project owners and the people that are delivering solutions into these banks? Again, that has been pretty challenging. So I would say that in few words, amongst these three category of banks, I think what I notice is flexibility and necessity to have an existing setup of a technical solution that allows you to be very flexible. In French, and I hope this is going to be a good friend for everyone and a very good understanding. When you're a captain of a boat, you need to be capable of navigating at sight. So today there is a storm, and you need a captain that is capable of turning left, right immediately. So you need to be flexible on that. The last but not the least, and this will become even a more dangerous world. We noticed also an increase of compliance measures that will also obviously impact pricing and so on and so forth. Compliance necessities. Why? Because right now people are also worried that who will get first hit by a fraud or a default or something like that. So again, work in progress, and really looking ahead to see how it will further develop.
Thank you very much, Michael. I think you mentioned, you made reference to kind of going into the storm. Casimir, do you see any additional factors impacting this area as we kind of set sail into the storm?
Well, I mean, clearly, Michael's given a good overview of the situation, and I can only confirm that there's this confirmation of the ongoing trend of digitalization and the need to be able to reach out to all the corporate customers of the banks through some digital channels. And this is something that was ongoing, that was, work in progress, and it's just the confirmation of this need. I would say that also due to the activity and the regain of, as Michael was saying, of controls, of compliance, we've also seen an expanding demand for in some way for people to work in the back offices in themselves to do the manual processing, because there's this extra load of work, of controls, of demands, of requests from the clients. You have to process the international trade, but there's also the financing behind that. So clearly we're also seeing a shift, so a temporary shift of activity from pure IT projects, which are perhaps a bit on hold, to managing the day-to-day business and getting all the focus on that.
Thank you, Casimir. So great considerations when introspecting on some of the current and future challenges. Artiona, what do you see as being the up-and-coming trends in trade finance and supply chains in the next 12 to 18 months?
Yeah, thank you for that question, Adam. So I'd like to look back in history to also pair it with some of the current developments and what we foresee that will be an enabler in the upcoming months. Namely, only 7 years ago, when the bank payment obligation was launched as an attempt to answer a question that is just as relevant, if not even more relevant today than it was during its inception. And namely, that question was, in short, how can we offer buyers and sellers the solutions that provide risk mitigation benefits of the documentary trade finance, but also the advantages of open account trade and supply chain finance, namely simplicity, cost, and working capital optimization? So this question is as much relevant today, right? Traditionally, buyers and sellers have been forced to use letter of credit and other forms of documentary credit issued and advised by banks to provide non-payment and performance risk mitigation in trade transactions. And we all know that a typical letter of credit, the most common form of documentary credit, requires the physical presentation, the manual checking, and the exchange of paper documents between a convoluted web of intermediaries around the world, which makes it slow and prone to error process, right? This becomes even more difficult today when DHL, for example, stopped shipping paper documents in several countries in the world, prominently in India or also Morocco, as Michael mentioned before. And outside the documentary credit option, the only other available opportunity for buyers and suppliers was to trade on open account terms, right? Which brings a lot of benefits to buyers in terms of delivery, but it is a risky option for suppliers, especially in the newly established trading relationships. And we know that over the past 2 decades, the payment terms have been stretched in many industries and countries, like beyond even 60, 90, 120, or even 180 days. So this puts a lot of significant stress on the supplier's balance sheet and creates a lot of risk for buyers. And this kind of endangers the entire financial health of the supply chains, right? So BPO was attempting to mitigate these inefficiencies, but earlier this year, for those of you that are in the business, you will know this very well, SWIFT announced the end of the BPO and the TSU. So the TSU is the centralized matching and workflow engine that operates as the backbone for the BPO. Yeah, and this is like going to be sunsetted by end of 2020. But in such situation, in COVID-19 times, it kind of coincidentally matched really well. And fortunately, we have leading banks that have been working on the next generation of the BPO. And that is namely what we're proud to also be pioneering here with payment commitment. This has been already piloted extensively with really great success between banks and corporates such as Daimler, LBBW, Commerzbank, MAN, BNPP, and the solution is now live as of March 2020. And I just wanted to make a reference to this alternative trade finance instrument, namely payment commitment, because I do see that broader adoption for the payment commitment module within the Marco Polo network will become more and more present in the DACH region, as well as in general, like broader adoption of digital trade finance instruments, which allow participants to exchange data while still owning and controlling their very own data without having destination platforms, or in simpler terms, the so-called Big Brother effect, so to say. And blockchain technology is crucial to the latter, but maybe I can elaborate on this during the rest of the conversation today.
Great, thank you very much, Artiona. It sounds very interesting, and we look forward to hearing about it. So, Michael, do you have any additional insights to what you think is going to happen within the future landscape within the next 12 to 18 months? Is
Michael's gone mute.
So yeah, absolutely. This is the technology, like helping. A lack of coffee, obviously. Now, one interesting pattern that I start seeing, which is very interesting, is, and I'm reusing the word qualitative jump in our industries, is the fact that I'm starting to see some really interesting requests from the Southern European markets. What I'm saying that is that I just literally, you see, receiving a very good news from Italy, like we've been using, I guess like everyone else, we heard a lot of news, but actually sometimes very negative news from Italy for the couple of months. And now in the market, in the business market. I received recently even an RFP in which an Italian bank was asking for a lot of digital capabilities, compatibilities, whether it's Marco Polo, whether it's EBLs or whatever initiatives, like really asking for getting more this digital world. And also, but even more surprisingly, potentially adoption of a cloud banking approach, whether we're talking about trade finance specifically, or whether even we go beyond that, beyond having the infrastructure in the cloud. And also, one of the technological requirements, which I think we all would be very interested in reaching that point, is the flexibility and the openness of the future systems. As you all know, Southern countries have always been more conservative, and they all tend to be more like in-house development rather than, you know, like having cloud, more mutualized solutions. It has, I see that trend rapidly growing, and I'm expecting it to become really like kind of a massive change.
No, very interesting. Thank you very much, Michael. I think we can all agree with Arturo and Michael, moving towards digitalization is going to be on top of everyone's agenda moving forward. But the journey is not easy. However, it is filled with opportunity. Casimir, how should we look at managing the physical risk of paper handling today?
Good question, Adam. So I'm not a medical expert, so I won't give any recommendations in terms of when we can or cannot touch paper. But we know there's this global worry and questioning, and in terms of what do we do with paper. And as we were saying, you know, at some areas the documents are stopped at the borders and not coming through. So in terms of managing that paper from a medical point of view, I think nobody really knows today what we need to do exactly, apart from not touching documents. That's the safest thing. But going forward, so what do we see? And Michael and Arturo was saying that we see this acceleration of under constraint of the corporates sending in digital documents rather than physical documents, just to keep the business running and going. So this has kind of pushed things forwards and constrained people to go that way if they want to continue running their businesses. So that is the good area, and it's kind of pushing that forwards. I think what we need to be careful is that it's not because you've scanned a document that you've gone digital. I think the audience will agree on that today, and that is the risk, is saying, okay, now, you know, I'm sending a PDF or a scanned document, so we've gone through the digitization road and we're good to go. No, I think, you know, we need to. This is just one step, and it's a facilitator. But if you're going into digitization and going out of paper, that's where we're working with Trade IX and Marco Polo and those actors of having a completely streamlined process right from the beginning to the end, without any paper at all, and relying on new technologies such as blockchain.
No, definitely some very good points there, Casimir. But moving back to Michael, do you see there being any alternative challenges within the paper kind of ecosystem, or moving away from this process potentially?
I'll try to summarize. I think that, like everyone here around the table agrees, and we are all working towards that. But summarizing that in one thought that I'm trying to preach for quite some time, I'm used to say that it takes time to learn fast. What we've been noticing, and what we are today noticing, and again, getting back to what Casimir said, I'm not a doctor, I'm not a scientist, I'm not, you know, like a researcher, virologist, and so on and so forth, but more or less everyone tends to agree, based on all the readings and reports, that the likelihood a second wave will hit if we are not careful with the COVID is extremely likely. Let's step one step backwards on that. COVID is not the only one. I mean, like, and that's negative, I should say, but there might be other external shocks. And even if we don't think about viruses, because hopefully we know we lived quite every 100 of years, but like viruses are not the only thing. But why making our life more complicated with paper? And I think this is the thing. As long as paper will make life easier in a way or the other, paper will still be used. Now, we all agree that across the globe, as we speak, paper became a burden. So based on what I can notice and what all my fellow colleagues and experts have noticed, is that if the trend follows and if the whole situation continues a little bit like that, ICC, World, EBRD, World Bank, all the banks, I mean, actually all the banks in the world, so far paper is on the brink of extension. I mean, I've been in touch very recently, like last week, with a CEO of a Swiss commodity trade finance bank, which is by definition very conservative when we're talking about paper. Today, they are capable of handling all their businesses digitally, so which is very interesting. Now, when I ask him the question whether it could go back when everything will be settled and smooth and getting back to a normal life, how he sees the things going ahead, he still was thinking that, yeah, some pieces of paper will still remain here and there, but I guess that will be part of a next question.
Definitely. Thank you, Michael. And now as we move away from digitization and towards digitalization, Artiona, what are your views on the journey to cloud for financial institutions, and more specifically around trade finance?
Yeah, so I had to smile when Michael made the example with the Italian bank, like being quite open to moving to cloud. I can only share our experience at Marco Polo Network. We're seeing several banks embracing a managed services approach without insisting, as maybe it was the case a couple of years ago on an on-prem deployment. And the benefits of going to cloud are being accelerated in the times we're living, because it's obvious. It's much easier to deploy, easier release management, easier testing, easier everything. Actually, for someone that has studied software engineering like myself and working most of the time in technology, I had to be amazed at the amount of paper docs that is, exchanged in trade finance scenarios, supply chain scenarios, and so on. So I think definitely digital data set coupled with a cloud-first deployment makes a very powerful combination. But not only that, I think cloud itself won't be the sole factor to, truly digitized trade finance and supply chain finance scenarios, because we are strong believers that destination platforms are also going to stop succeeding in the long term. We definitely believe in this blockchain-based architecture where every participant owns and controls their own data, as I said before, without any, having a big brother effect here. And I have to emphasize, because most of the people that have only heard about blockchain, or I'm sure even some of the experts that maybe did not have the chance, to get hands-on with various blockchain technologies for business out there, there is this confusion that data is shared ultimately with everyone. That is not the case. Like, for example, the technology choice that we have made with Corda allows peers like banks and corporates or insurers or logistics service providers to run their own instances, their own node, and to share data on a need-to-know basis, which essentially gives all the power of what you see is what I see. So this single source of truth shared and accessible by everyone, but without having to share your very own data. So this is really, really important. And maybe the last factor that I can highlight here is the need for an open architecture. So I'm sure you at Finastra also emphasize on this. It's really of paramount importance to, design the solution in an API-driven manner, because that will just speed up any further integration and will allow participants to not get locked in just one system or one environment, or as we say within the Marco Polo network. And because of both this open architecture, like API-driven architecture, but also the advantages that deploying and developing on top of Corda gives you, we're saying that every participant can connect once to connect to many. So you don't need to implement bespoke integrations for each of the scenarios, like integrating to your back office systems, or like if I'm talking on the shoes of the corporate, like to their ERP or like general ledger. So certainly that can be done only once, but then once you are part of the network, you have so much more access to liquidity and even more options than the one that you originally thought of. So these are the technology decisions here are also very important to ensuring that the full path and the journey towards digitization is done in the right manner.
No, I think one of the key things that you made mention around Finastra, and again, one of our slogans is the future of finance is open. So that message definitely resonates with us at Finastra. In addition, you made a lot of great references to the most recent and current innovations within the industry. Michael, have you seen any of these being within application and adopted within financial institutions, and what is that trend currently looking like?
Sorry, I didn't get about the new innovations, you mean?
Yes, sorry. And how adaptation within the financial kind of ecosystem within banks has been kind of adopted, and how do you see that kind of progressing in the next?
Yeah, so the way I see it is that in the past there were several initiatives, like coming from various regions, very often the Western world, including Americas or the Nordics or UK markets, were leading that compared to more southern countries, or even up to a certain extent Asian markets, even though Singapore is an exception. We've seen several localized initiatives. So in a perfect world, having one standard, Fiona mentioned BPO or one initiative around the world, I would say I'm not saying it's unrealistic, but that will take some time. I think as we speak today, the flexibility of the different solution providers, and this is exactly Finastra position about open banking, also about our own, flexible Fusion Fabric.cloud that helps connectivity to different standards. Marco Polo giving tools to fintechs to build their own adapters, to the banks doing their own homeworks as well. So the way I see it is we will have and we will need to have aggregation of all these standards by having flexible converters and flexible open solutions. And that's the way I see it. And all the different standards around the world will most probably continue to exist for quite some time, because I don't believe a perfect world will exist. I think in specificities and localizations, I think obviously you cannot say that Nigeria or Burkina Faso has the same type of capabilities or technology capabilities than New York, so or the USA. Now, market adoption will continue growing. I think technology will be the enabler, and that's our role. I mean, like from TradeX to Finastra to actually to all the players, to Casimir, to Efficiency, to have the whole solution sets ready to help. We are business enablers. And yes, I think that's how I see it, is our capabilities, overall capability to get things done.
No, thank you very much, Michael. Always great to hear how trade finance is evolving and opening up to the greater ecosystem of opportunities. But going to Casimir, trade finance syndication in 2020 and beyond, dream or necessity?
I get all the good questions, don't I? I think I'll take this as a continuity of the previous subject. So just first of all, I wanted to highlight 2 points on our previous question, saying that journey to the cloud. What we see is with these new players such as TradeIX and Marco Polo, there's a real traction for the financial institutions to go to the cloud, and this is also bringing them, so naturally opening up for them to have to think about their legacy systems being in the cloud also. So that's very important. It's something that they're saying, oh, I'm having this front office system, so why not have my back office also in the cloud? And this is really pulling that in that direction. So that's a great traction. And as I was saying at the beginning, we are an integrator, and clearly we're making the Finastra solutions and the TradeIX solutions work together. And what we were saying about open APIs and this, it's really becoming an easy world to streamline the processes, and we've got these integrations that are really relatively easy, and you get a good time to market around that. So and everybody seems to be working in that same direction, because that's where the trend is going. So that was about the cloud. But coming back to the how trade finance is evolving and syndication, what I'd say is more, and in the continuity of the previous point, is that we're seeing and we're working with clients in terms of a virtuous circle. If we look at supply chain finance, for instance, we see our clients and we're helping them get that virtuous circle going and making all their businesses, processes, and systems work together, going from the supply chain finance, coming into their back office system, processing the invoices, but also getting those invoices financed. So it goes to their financing systems and then comes back and goes back right to the corporate. So there's really this full integration. I know at Finastra they talk about connect corporate banking, and this idea is really coming into place, and we really see it. So we have our clients saying, okay, I've got my financing system on one side, I've got my back office, I want to go out to the blockchain. How do I make all that work together? So this is really, the accelerating trend, and on that you put the cloud, because the cloud is an accelerator. COVID is saying, well, people are more open to going digital. So it's both a time where everybody is impacted, of course, and looking and seeing how you can be the most efficient possible where there are savings, but there are also great ideas and mindsets that are changing, driven by all this.
That is a great perspective, Casimir. Thank you very much. And I'm sure something that will need to be considered by all banks in the near future, and as a great opportunity.
Absolutely.
Definitely. And now, kind of moving from 2020 to 21, and again taking potentially just one step back in trade finance. Michael, how do you see the developments within the paper sunset move in 2021?
A little bit like in the summary of all what has been said previously is how paper will be still help day-to-day life. As I say, I mean, like, whether you are a banker, whether you are a corporate treasurer, The thing is, you need to adapt to reality. And if paper is more burden than a help, then obviously naturally the business will go into the more easy and fast way. And again, there are a lot of actual, I would say, side stories that I can tell, but overall, the market has slowed down pretty drastically, due to not only to the paper, but due to this overall situation, COVID situation, whereby the workers cannot come necessarily to work. The boats are shipped in a slow manner. Hence, there are delays in shipment dates. If you have delays in shipment dates, then means that your letter of credit is not compliant anymore. Then means that the bank that is financing your letter of credit, for instance, is having trouble. Obviously, I'm talking about letter of credit, but same applies to supply chain finance, to the exception that supply chain finance is much more real-time access to data. It's highly unlikely that you will have a customer bringing an invoice coming from nowhere and just giving it out of the blue. So having digital intel, having digital more the data's big data, and making the best of use of these data will be the way forward. I'm used to say that the solution, whether it's digital or paper, if it doesn't help your day-to-day business, it's not going to be used. And that's what happened with the BPO, by the way. One of the reasons why the BPO got extinguished is because it wasn't used massively. Adoption was not good enough. Now, in the future, I'm convinced that what we've seen, what we've been experienced, will clearly drive us in the right direction, i.e., the clear paper sunset. I mean, I would say that over the couple of few, not months, but years to come, the paper will dramatically decrease.
No, thank you very much, Michael. So moving to Casimir. Casimir, what do you think banks need to start considering today to make 2021 a game changer in terms of moving away from a paper-based infrastructure?
So, we all agree that, the road is to going to digital in some way or another, and the banks also. Now, paper, the banks know how to manage it. So, they've always done it. So they know the process, and it's one process, and it's one incoming format. Going forwards, everybody wants to go and believes in this going to the digital. Now, what we see on the market is multiple actors providing these options on very specific businesses and areas. So now we see the banks needing to communicate in a digital format to multiple fintech or technology actors, bringing them these new solutions. So Marco Polo is one of them, but some other actors on other areas and other products. And therefore, there's a big challenge in terms of what we call interoperability. So having, a centralized back office offering within the banks, that's their role. That's, they're solid and they have strong systems and they bring it all together. And they need to go out very fast to the market and to connect and to be able to operate with these new actors on the market. And that's where we come. And that comes back to what we were talking about, cloud, open APIs, and this we really believe in. And so the banks need to know that going from paper to digital will also mean going from something that they know and they master completely to multiple actors and multiple inputs and outputs.
No, definitely. 2021 will definitely be an interesting year if banks can really kind of bridge that gap and be able to have that connectivity with third-party players. So thank you, Casimir. So moving to digitization, and now to digitalization, and from sunset to sunrise. Artiona, how do we see developments practically progressing within 2021?
Mhm. Yeah, so 1 week ago, the ICC digitization group published in the form of a paper the digital rapid response measures taken by banks under COVID-19. And somewhere in there, it was also written that we should be cautious about a rapid response approach, and that they expect that many of the rapid responses or quasi-digital solutions in place today will be re-examined and likely withdrawn post-crisis. However, if lessons are learned, this experience will positively change how banking and trade finance is originated, transacted, and settled. So I would say that this experience of rapid digitization should not go to waste, and both financial institutions and corporates will need to re-engineer the business processes following COVID-19. And this can only take place if it is done hand in hand with the government support. Like all these stakeholders should really carefully examine so that let's say the good that actually emerged from these difficult times and like the challenges to rethink business, that those efforts do not go away, basically. And I think certainly that the trends that will enable this, also as discussed in the ICC white paper, are certainly e-signatures, so electronic signatures, the capability to sign docs online, so without needing paper, electronic documents, not just purely a scan of the documents, but having a truly powerful digital data set that you can also do cross-matching or like do line items, like a really granular hierarchical structure of the document that allows you to do much more complex operations around that, and like maybe open new business processes or like flows that you did not have in place. And absolutely the ongoing progress of the digital solutions and platforms or alternatives to like the BPO, as I mentioned at the very beginning of the session, through payment commitment, what we're doing at Marco Polo. This is like certainly a space that will need to be monitored, because I'm looking forward to seeing more and more banks and corporates adopting the payment commitment solution that we offer. And yeah, we shall see, but I really do hope that this will make for a significant turn in history on how banks and other financial institutions, along with their corporates, truly embrace digitization, for a more effective supply chain and trade finance operation.
No, thank you very much, Artiona. And I think just on this topic, I think it would be great to get some insight from Michael and Casimir on, do you see 2021 the kind of the future? Do you see the banks looking at their whole trade cycle that they offer when they offer full trade and supply chain and kind of look and map that all out? Or do you see them looking at specific areas within their trade and supply chain propositions? So maybe I'll just pass it to Casimir. What do you see the greatest focus coming out of where we are now and into 2021 being for banks when it comes to digitalization?
Yeah, so I think the trend will be digital. That's for sure for what we see today. And in terms of the trend, it's the area that we were talking about a bit earlier. So it's interoperability, difficult word to say in English. So interoperability, and this for me, I think, is the challenge. Is that as we were saying, there are these fantastic new business and technological options that are open both to the corporates and to the banking world. Now you need to get all that to work together, and the real risk is that not being able to manage scalability. So you get a few corporates on, and then you have multiple systems, and you're talking to all those, and then your back office just cannot follow. So you need to be able to go out to the market to try out some of these new initiatives, to stop also. So you need to to have a start and stop approach, and you need to focus on the ones that are really bringing in added value, and then you're going to get the volumes, and you need from day one to know that you're going to get those volumes behind, and to be able to streamline the process. So that's, for me, that's really the challenges.
No, great. And Michael, do you have any additional points that you'd like to make on that?
I think Casimir summed it up pretty well, and confirmed as well that Finastra's strategy for the last couple of years towards an open banking, with the help of FusionFabric.cloud, to API trade related to supply chain finance openness is clearly going into that route. This is where the market goes, and that's what the market needs. So well, I think I'm not saying that I have not much more to say, but this is clearly the path.
Thank you very much, Michael, and Artiona and Casimir. Great insight. So the horizon definitely seems to be filled with a number of opportunities for trade, and I think something that was raised before by Casimir was, the ability to scale and be able to not only support a growing business, but to be able to offer trade finance to the wider part of your business. So Casimir, I'm going to be passing this back to you. How do you see big trade banks being able to support all their corporate clients down to SMEs within the trade finance needs in the future?
There again, coming back, and this word has come up many times during the conversation. It's digital. This is it. You see the corporates crying out to have more support on the portals. So I think front office portals giving direct access to the SMEs, the corporates, will clearly be a focus in the coming year. From a pure business perspective, maybe something that we're seeing is more and more requests to manage guarantees, in this changing world, and therefore to be able to manage these. So there's a bit of a mismatch with the fact that the SWIFT is postponed by 1 year, and that was bringing added value in terms of management of guarantees and undertakings and all that. But everybody's had to make some decisions and to go forward. But clearly, those kind of products that need to be more and more used because of the uncertainties, and therefore the corporates will be prepared to pay a bit more for this service, and they will want some added value service which they can get onto. The portals need to evolve to take on all those. Maybe also, and the trend that we're seeing is more and more integration. We talked about it earlier with the financing side, but also with the cash management. So having a direct access, and there again, it comes to the digital world, to being on a portal. If you're on a portal and you're looking at your trade part, if you have direct access to your cash management, you can really go forwards and provide added value services to your clients. So it's, those are the areas that we see for the coming year.
No, thank you very much, Casimir. I think one of the things that we've kind of shown is that we move from digitization to digitalization, and bridging that gap. But I think when it comes down to being able to service the wider business, will that be enough? Do we need to potentially look at other aspects? Now that you have these platforms, how do you automate, and how do you create greater amount of, you have a large amount of data, and be able to draw insights in real time? I mean, I'm going to pass this quickly to Michael. Michael, how do you see that transposing within the next year? Being able to scale but still be able to support. from a bank's perspective?
This is the critical question. Having a lot of data actually is creating an additional challenge. Is that too many data? How do you segregate these data? How you read the whole amount of data? So you need a qualitative assessments, and you need to focus exactly on what qualitatively could be interpreted by the bank or by the customer, ultimately by the corporate or the small medium-sized enterprises. So artificial intelligence will become one of the trend. Typically applied to compliance, typically applied to credit, to risk assessment. Ultimately, whether we are talking about risk assessment of the physical transaction, where your goods are in real time, thanks to shipping companies that are fully digital and that transmitting in real time where your vessel is, or whether we're talking about the data of the document or the title of goods that will become fully digital and accepted worldwide, thanks to ICC or other government bodies. All of that, we need to, if I can say, put that in a blender, we need to shake it, and we need to find out this global common solution, because that's what will be the key of the success. Again, very careful and very conscious that all these facts and all these initiatives will be most probably at different speed in different markets, but ultimately they will all come under the same umbrella: efficiency and being capable of and flexibility, and being capable of to read and interpret those data. So digital, yes. Artificial intelligence, absolutely yes, because that will help us see. But nevertheless, qualitatively interpreting, having an interpretation of all of these will still be a human body to be capable of reacting. So I'm getting back to what I said, I think in one of the previous questions, is that all of those are solutions, call it tools or solutions, which then will help address real cases, and that's the way I see it.
Great.
Maybe Adam, if I can also make an additional point here. I know we only have 3 more minutes left, but Casimir mentioned the need for portals for SMEs. I think that is also that goes hand in hand with the quicker onboarding. Like, for example, when we consider supply chain finance programs, and you think of 80% of the entire tail being composed of SMEs or smaller suppliers, only 25% of those, according to a study by McKinsey, if I'm not mistaken, has access to supply chain finance programs. And the reason for that is, one of the main reasons is onboarding challenges, the ease of onboarding of those suppliers, and also compliance constraints. So we also have to think that way to optimize access to liquidity for long tail suppliers.
Thank you very much, Otiona. That's a great point. A very interesting consideration to take forward. I think, how do you kind of bridge that gap in making sure that you create not only a digital experience, but one that comes from front to back, right? To ensure that the customer experience is actually at the core of what you're looking to achieve. So great. I think we've had a great amount of insight from all our speakers, going through where we are and where we're going. And to conclude today's session, I'm just going to ask each speaker to give a final comment on where they see business going forward. So I guess let's start with Michael. Do you see trade finance getting closer to digital initiatives, or that supply chain digital initiatives are getting closer to market needs?
Let me first say, I'm going to most probably give you a Swiss answer. I would say, number one, there might be a third option. But again, we're talking about middle long term. The third option that I can potentially imagine is also both wording, both digital initiatives could potentially converge and merge together, and have some specificities depending on whether you're talking to an SME or commodity trade finance or whatever type of industry. So that's my first remark. Second remark is for sure the years to come. There has been a shock, and the years to come won't be the same as we used to live. Hopefully for the good. I mean, really, I'm crossing fingers, and really, please. And as you can see, I have an office. I have here 2 printers. If the market could help me get rid of those 2 paper printers, that would be really good, because I don't want to print anything anymore. So that's my take on that, and I guess everyone agrees that paper is I'm not saying getting obsolete, but I hope it will get soon.
Thank you, Michael. Otiona?
Maybe I'd like to tackle the question from a different angle, also showing some of my experience with dealing with well-seasoned bankers that are at the very core of their trade finance respective programs. So I like it a lot that people with 20 years of experience in trade finance or supply chain finance are at the forefront of this. Like the payment commitment, for example, just as a pure example, the initiative behind payment commitment, and also the legal rule book attached to it. This is all being drafted from very people that have been there their entire lives. So I think that it is also crucial that we're having some of the key people in the industry being very prone to digitization and not, stubbornly insisting on paper docs, but being open-minded. And I think with their help, and certainly the technology advances that are not missing, not lacking as of today, it will just be way better than what we have today. Like, we shall see, but I'm really optimistic and looking forward to a more digital future in trade finance.
Great, thank you very much, Otiona. And finally, Casimir.
So, I mean, I just have a few words. I think the main things that have come out of this discussion and confirm the trends. Again, in a changing world, so we will see how things stabilize in the coming months. But it's digital. I think we've talked about it a lot. Cloud. There again, there's a mindset that is changing. Maybe not for the good reasons, but people are saying, I can work remotely, so why not think about cloud, even if there's no direct link. But it's changing also the mindset, and we've seen it just over a few weeks in terms of institutions being ready to work in different ways. So that is very interesting. And then the last point is making all that work together, interoperability and scaling the model.
Well, I think we all come to that single agreement. Thank you very much, Casimir. I think you've summed the session up wonderfully for me. So thank you very much. And again, lastly, thank you to all our speakers that have joined on today's panel. Casimir, Otiona, and Michael, it's been only a pleasure to discuss where we are at this current moment and kind of how do we adopt and adapt the current opportunities within the technological environment to be able to ensure that banks and that we support banks, as well as banks take into consideration what are the opportunities and how can they leverage where we are now to ensure that they can offer a more seamless and customer-centric solution for the future. Please, again, for all those who've been lucky and enjoy the session, if you'd like to reach out to our speakers directly, please feel free to do so, and as well as correspond with any of your contacts from Finastra for more information. Thank you very much. Thank you very much all to our speakers.
Thank you, Adam.
Thank you.
Thank you.
Have a good day.
Have a very good day.